Good morning, everyone. Looking at the US stock markets, the Dow has earlier been trading in a volatile manner after retracing from the recent peak of around the 26,300 points level. Since then, it has pulled back, forming a double bottom formation along the 24,250 points before staging a very sharp recovery, climbing back above the EMA 120, 16, and also closing above the EMA 20 level on last Friday. So for now, it has also breached above the 25,000 psychological level. And on last Friday, we are seeing the Dow has gained about close to 200 points. For now, we could expect the further upside on the Dow Jones index to trend back up towards the 26,000 or even towards the 26,300 points level. That will be the immediate resistance for now. And should there be a breakout upon that, then this could be the W-shaped formation or the double bottom formation breakout that we are looking at for the next wave of rally on the US stock markets. On the broader market, the S&P 500 was traded in a similar manner after rejecting along the 2815 level. We are seeing the S&P 500 has pulled back recently towards the 2625, forming a double bottom formation, and subsequently rebounded very sharply, closing above the 2700 psychological level as well. For now, we could expect further upside on the S&P 500 to trend towards the 2800 or even towards the 2815. That will be the immediate resistance for now. And should there be a breakout above that, then this could be the W-shaped formation that we're looking at for the next wave of rally on the S&P 500. The recovery on the US stock markets came ahead of the G20 summit meeting over the weekend. And over the weekend, we did saw that US and also China has inked an agreement not to add additional tariff or trade tariff in 2019. So this has boosted the positive sentiment on the Wall Street as well. As if you look at the US futures market on the Dow Jones, the Dow has really gapped up and is trading higher by about 400 points on the futures market, US stock market. On the crude prices wise, we are seeing the crude prices has ended a very volatile trading session, falling from the peak of 77 towards the recent low of 50. It is managed to recover along the way, but the recovery was short-lived as the crude prices has staged the bearish flag formation, and it pulled back towards the 50 before traded on a sideways manner over the past 1 week trading period. For now, let's monitor for these two bands, the 50 towards the 53, until we can see a breakout on the either side of the way. Then only we can confirm for the next direction on the crude prices. If there's a breakout above the 53, we could expect further recovery just for technical rebound towards the 56. But if the 50 level could not hold and we retrace beyond that, then we might see further correction on the crude prices to slump towards the 45 or even towards the 40 US dollars barrel mark. Okay, some of this on our local front. The FMKLCI has been continues to trade on a sideways manner between the 1670 towards the 1700 level over the past 1.5 to 2 weeks trading period. On last Friday, we are seeing the FMKLCI has gapped up to retest the 1700, but we are seeing this quick selling pressure has erased all its intraday gains, and subsequently the FMKLCI has formed the bearish engulfing candle on last Friday. So tracking the gains in the Wall Street and also the positive developments between the US and China trade agreement, we could expect some of the gap up formation on the FMKLCI over the near term to trend back towards the 1700. That will be the immediate resistance for now until we can see a firm breakout above the 1700 and the key index managed to maintain above that level over the next 2 to 3 trading days. Then only we can confirm for the FMKLCI to trend back towards the 1730 or even towards the 1740 level. In the meantime, the 1670 level will serve as the immediate support level for now. We could expect some of the gap up formation on the FMKLCI at least for today, but gains would likely to be capped just towards the 1700, given that Genting has reported a big set of quarterly earnings. some of this on the broader market. The broader market has earlier been trading on a sideways manner between the 12,800 towards the 13,200 points level. Since then, we are seeing a renewed selling pressure on the low liners as the low liners has tripped below the 12,000 points, and the consequently continues to trend lower for the next 7 consecutive trading days towards the recent low of 12,200 points level. It did breach below the 12,200 points level on last Friday, but given the potential positive sentiment on at least for today, we could expect some of the gap up formation or some of the bargain hunting activities following a 7 days of selling activities. We could see some of the bargain hunting activities on the lower liners or the small cap index to recover back above the 12,200 points level to trend back towards the 12,800 points on the small cap index. Some of the stocks that we can watch out for firstly would be Lihan. Lihan has been recovering from the recent low of around the 2 ringgit and 26 cents level. Since then, we are seeing the higher high and also the higher low formation being uh, formed on Lihan. And subsequently, Lihan traded towards the recent peak of around the 3 ringgit and 30 cents level. After touching the 3 ringgit and 30 cents level, or 3 ringgit and 31 cents level, we are seeing Lihan has staged a healthy pullback just towards the EMA 60 level and form a good bullish candle. This could be treated as the breakout pullback and the continuation pattern that we're expecting Lihan to retest the 3 ringgit and 31 cents. That will be the immediate target price for now, followed by the 3 ringgit and 63 cents level. Your stop loss point will be located towards the recent low of around the 2 ringgit and 93 cents level on Lihan. Things appears to be quite positive on Lihan right now. As you can see that the uptrend interpretation formation was established towards the end of September. The MA9 is above 20, above 60, and also above the 120 level. On Tongguan, we are seeing Tongguan has again retraced towards the recent low of around the 2 ringgit and 6 cents level. Subsequently, price has formed the W-shaped formation breakout above the 2 ringgit and 27 cents. After the W-shaped formation breakout, we are seeing the continuous recovery on the Tongguan as price headed towards the 2 ringgit and 72 cents level, forming the inverted hammer candle. After touching the intraday high of 272, we are seeing price has staged a healthy pullback just towards the EMA 9 level before recovering on last Friday, accompanied by some of the improvement in volumes being traded. Like Lihan, this could be the short-term breakout from the 227 towards the 272, a pullback and a potential continuation pattern for Tongguan to retest the 272. That will be the immediate target price for now, followed by the 2 ringgit and 88 cents level. The stop loss point will be located towards the 2 ringgit and 45 cents level on Tongguan. On LBS, price is still in a downtrend formation, so any recovery from now is just it will be just taken as a technical rebound play. LBS has again retraced towards the recent low of 59.5 cents level. Since then, price has recovered towards the 74 cents. After a 2-day recovery, we did not see any follow through by interest. Instead, price has pulled back and traded on a sideways manner since then. We are seeing some of the accumulation was taking place on LBS on the 8th of November, but the next day itself, there's no follow through by interest, and it formed a bearish candle along with some of the similar volumes being traded compared to the previous session. Subsequently, LBS has pulled back and traded on a sideways manner over the past 2 to 3 weeks trading period. So for LBS right now, we need to monitor for this short-term consolidation record above the 70 cents. If price were to manage to breach above the 70 cents, then we could expect price to trend back towards the 74 or even towards the 79.5 cents level. Your stop loss point will be located below the 65 cents, and if you can take further risk, the final defense will be located towards the 59.5 cents level on LBS. things appears to be quite positive on LBS right now. As you can see that the MACD indicator has been forming the higher high and also the high low formation. The MACD histogram has already turned green yesterday, whereas RSI is retesting the 50 level. Should there be a breakout above the 70 cents on LBS, we could expect the RSI to trend above the 50 level. Last two company for today will be firstly is JHM. JHM has again trended higher towards the recent peak of 1.45 level, forming the inverted hammer candle. Subsequently, price has pulled back towards the recent low of around the 1 ringgit and of 1 ringgit and 2, 1 ringgit and 3 cents level. After touching the 1 ringgit and 3 cents, we are seeing price traded on a sideways manner. But recently, we are seeing some of the higher volumes being traded on JHM towards the recent peak of around the 1 ringgit and 28 cents level. After touching the 1 ringgit and 28 cents, price subsequently pulled back and traded on a sideways trend toward between the 1 ringgit and 10 cents towards the 1 ringgit and 16 cents level. For now, let's monitor for the short-term consolidation breakout above the 1 ringgit and 16 cents. Should there be a follow-through buy interest above last Friday's high, we could expect price to trend back towards the 128 or even towards the 1 ringgit and 45 cents level over the longer term period, with your stop loss point located below the 1 ringgit and 10 cents level on JHM. So the risk to reward ratio is quite lucrative on this counter. As you can see that you're taking a potential 6 cents risk towards the potential 12 cents gain. So the risk to reward ratio is just 1 to 2 times. Last company for the day will be End-to-End Connect. End-to-End has again rallied towards the recent high of around the 1 ringgit and 37 cents level. Subsequently, price pullback towards the recent low of around the 99 cents. After touching the 99 or 98.5 cents level, we are seeing price has formed some of the short-term hammer candle along these couple of days. For now, let's monitor to see if there's any follow-through buy interest above last Friday high of 1 ringgit and 7 cents to confirm for the hammer and also the recovery pattern for us to trend towards the 1 ringgit and 18 cents or even towards the 1 ringgit and 27 cents. Your stop loss point will be located below the 99 cents level on End-to-End Connect. Price is on the downtrend formation right now. As you can see that the EMA 9 is below the 20, below 60, and below the 120 level. So any recovery from now will be just taken as a technical rebound play until we can see a higher high and also the higher low formation being trend on End-to-End. If you have any questions, you can put in your chat box. I'll reply you shortly. There's one question here on Dayang. Dayang, I think we did mention on this counter before. To trend for price to hit towards the 68.5 cents level, it did manage to breach and it did manage to hit the 68.5 cents after this short-term consolidation between the 55.5 cents towards the 58.9 cents level. It did manage to hit the recent peak of around the 68.5 cents and also close above that. But subsequently, price has reversed its position, accompanied by some of the high volumes being traded, especially on the 26th of November. With the high volume being traded and a bearish candle being formed on that day, we are seeing the selling pressure on Dayang as price retraced back. For now, we could expect price to continue to trend lower towards the 50 cents. That will be the immediate support level for now. If price cannot hold above the 50 cents, then you definitely have to cut loss immediately, or else we might see some of the similar pattern continues to form below the 50 cents. So for now, any recovery will be just taken as a technical rebound play, and you should adopt the selling the strength strategy should price recover towards the sell-off, which is located towards the 65 cents level. So any recovery towards the 65 cents will be an opportunity for you to sell. For now, we are seeing the MACD indicator has really issued a sell signal on last Friday, whereas the RSI has been maintaining its position below the 50 level over the past 2 to 3 trading days as well. So the big momentum is quite weak on Dayang right now. If there's no further question, then we'll end the morning briefing for today. Thank you.